Hey guys, it's Dave from Capital Edge Financial Planning, and I have a quick question for you. Do you know what kind of life insurance coverage you have? Let me explain the two different kinds of life insurance coverage to help you make an informed decision when it comes to your future financial planning needs. Okay, so before getting into the mechanics of the different types of life insurance coverage, the number one question you have to ask yourself is, what's the purpose or what's the main need behind the coverage? Is it for short term or is it more long term? So some of the more common reasons for insurance coverage would be, by far, young dependent children. If you have kids, you definitely have to have a personal life insurance policy. And a group benefit plan, that's great, but it's a lot more beneficial to have a personal policy where you have control over that contract, that policy, and its actual personal policy. Another reason would be things like mortgage repayment, debt repayment, car loans, student loans. Do you want those to be paid off when you pass away, or is that going to be passed on to your wife or your beneficiaries or your next generation? So that'll be number two. Another reason would be things like final expenses. So the average cost for a funeral here in Alberta ranges between $4,000 to $12,000, $15,000, anywhere from there. But just the immediate need for cash would be another reason for life insurance. And then finally, if you have a lot of stuff, a lot of assets, whether it's RSPs, a business, the cottage, that forms part of your estate. And when you pass away and you're passing that down to your next generation, that gets taxed. Unfortunately, the two guarantees in life are death and taxes. So it's very difficult to avoid the taxation of your estate, but you can help alleviate that tax liability with a life insurance policy. So those are just some of the reasons for a life insurance policy, but let's head back to the office and I can explain visually what those different types of policies look like. Stay tuned. Okay, so the very first type of insurance, which most people are familiar with, is basic term insurance. The reason why most people are familiar with it is because it's a lot more cost effective compared to the other type, but it serves a purpose for a short period of time. So whether it be 10 years, 20 years, this ranges anywhere from 5 to 10 years of coverage. It maintains a level benefit, level premium for that period. So it might be a $500,000 policy that stays the same for a level premium of $50 per month, for example, for a 10-year period of time. So what would that look like? So $500,000 is the benefit amount. For the first 10 years, it stays the same premium. After 10 years, the premium would go up if you wanted to continue on with that coverage, but the premium would be up here and that would maintain for another 10-year period. So it keeps going up in premium every 10 years without any medical questions until the age of 75, 80, depending on the insurance company. Essentially, term insurance is not intended for the long term. This is for debt repayment, mortgage protection. If you have young dependent kids, normally that's intended for a 20 or 25-year period, but it's definitely not for estate planning or final expenses. Also, as an FYI, when the policy renews at this much higher premium without medical questions, once again, so you could be diagnosed with cancer here, they would still guarantee the premium at this much higher premium. If you are still in good health, what I typically recommend is to go through the medical questions. The premium is much lower and you can go through the next 10 years at a lower rate compared to this guaranteed renew rate. Term insurance, short-term coverage, short-term need. Next. The second type of life insurance policy would be a permanent policy. This is ideal for the long-term need for insurance coverage. So this would include things like final expenses or your funeral costs when you pass away, taxes liable when you pass away, things like that. So in this situation, same thing. We have time. In this case, we have death benefit though. So The permanent life insurance policy has a level premium for your entire lifetime, but the death benefit actually increases over time. It has what's called cash value that accumulates over time. So this cash value, you can think of it as a side investment. It's allowed to grow tax sheltered. And these are the types of policies that you may hear where you only pay into it for 10 years or 20 years. And after that period, you don't have to pay anymore because the cash value can pay for the future premium payments. But this is intended for long term. It has that added bonus of an equity or an investment component to it. Typically a lot higher in premium, but it's definitely eventually going to pay out one death per person. So one of my favorite strategies when it comes to life insurance planning is a combination of the two. So both term and permanent. So one of my all-time favorite strategies when it comes to life insurance planning is what's I call the combination strategy. So this is a combination, the best of both worlds, term insurance and permanent insurance. So this is what it looks like. Time, death benefit, to have a small component, and this could be $25,000, it could be $50,000. In this example, I'm gonna say $50,000 of permanent insurance that stays with you for your entire lifetime. It does gradually increase if there's a cash value component to it, but the permanent insurance is addressing things like final expenses, death benefit, basic estate planning needs. This will never cancel on you. Eventually it's going to pay out to your beneficiaries. On top of that, if you have young dependent kids, if you have a mortgage, to add a second layer of coverage, this might be $500,000, it could be $1 million, whatever it might be, but a second layer of term insurance, which is going to be a lot more cost effective compared to the permanent insurance to address the short-term need for insurance. So this might be for 20 years, it might be for 10 years, but the two different layers of coverage, long-term and short-term, keeps the premium down and addresses those two needs for insurance coverage. So this is ideal for young families. This is ideal for business owners, but it helps keep the premium down and is a really cost-effective solution for your financial planning needs. So there you go. Life Insurance 101, simplified. It doesn't have to be that complicated. Here's what I would suggest. Talking with a professional, certified financial planner, this is what we do. Making sure that all your life insurance needs are looked after and doing a proper financial planning needs analysis to determine the proper amount of insurance, term, permanent, whatever it might be, and giving you that peace of mind so you can sleep at night knowing that your family's looked after. There's an old saying in the industry that it doesn't matter the type of coverage, term, permanent. When a beneficiary calls in, all they're concerned about is making sure that the life insurance policy is in force and it's going to be paid out. Let us help. Give our office a call. We're not getting any younger. Unfortunately, life insurance premiums go up the older we get. And also making sure that you're in good health. Who's to say that you're not going to be insurable in the future due to a heart attack, cancer, whatever it might be. So get the life insurance while you're young, you're in good health. Give your family that peace of mind. If you have any questions, give our office a call. We'd be glad to help. But until next month, take care and stay safe.